Hi everyone, and welcome back to Decentralized Voices. My name is Daria, and on this show we talk a lot about building, code, communities, and the future of decentralized systems. But today we are talking about the fuel that makes those dreams a reality. Capital. My guest today is Anna Magiera, Managing Director at ICLUB, a startup mentor and a seasoned advisor in the world of angel investing.
Hi, everyone. Happy to be here.
Happy to have you today, Anna. In this episode, Anna and I are diving into the death of finance bro stereotype, why 81% of funding is flowing into AI, the rise of syndicates versus traditional VCs, and why the CEE ecosystem might just have the edge over Silicon Valley this year. So stay with us for the full conversation and share it with your friends. Anna, I'm excited to have you today. Please give a short overview of your background and what do you do at iClub?
Thank you for the invitation. It's really great to be with you here. So, about myself, I started my career in consulting and then I transitioned into the investment industry almost by accident. Then I stayed by choice. Over the years, I've had the opportunity to work across nearly every part of the ecosystem: private equity, venture capital, corporate venture capital, startups, and finally, angel syndicates. At a club, I lead partnerships, which means that I constantly work with investors, founders, with startup ecosystems. And my role is focused on building meaningful connections and helping our community grow, but in a sustainable and impactful way. I'm also responsible for our educational projects, as we are on the mission to educate 100,000 angel investors within the next 10 years. So that's what I do.
Yeah, that sounds exciting. Thanks for sharing. Most of my audience knows founders and creators, but not VCs. Can you walk us through what it means to be an angel investor and a partnership lead, and how it's different from the finance bro stereotype in Patagonia West?
Yeah, I look a bit different, really. Well, those finance bro, they would probably look at spreadsheets, move money around, and if you are talking about angel investing, so it's almost opposite because it's very human. It's about people investing and using their own capital and money that they have gained through working hard, through being entrepreneur, owners of the businesses. It's basically how they multiply and grow their capital. It's one of the ways, not the only one, but I would say the one that is becoming more and more popular today. That's differ the angel investing, and for me, it's also in iClub more about community building and trust building than just kind of Wall Street thing and risking, etc. But it's more about educating, building trust, building relationship, and making this more kind of meaningful for investors.
Yeah, thanks for sharing. And I can say that trust now is the most hyped word in investments, in finance, in crypto, in tech in general, because now people realize that okay, we have tech, we have money, a lot of things around, but we don't gain trust. We're still working on make people trust us, our project or our investment strategy. For people who have a few $1,000s saved but are intimidated by the word investor because it might sound too serious, for example, to them. So what does investing look like today? How do syndicates differ from VC firms?
Yeah, so there is a good news that actually the barrier to entry has become really low and the access is really there, because that the misconception is still there and the bias that, angel investing and investing in private deals is just for people with millions of dollars and those who have some insights or who have some connections. But actually, the syndicates and the clubs like iClub. So our mission, our goal is actually to change that perception, because we have been on that mission since 2018, when we first saw this trend that people, private investors, they actually might be this kind of, as you mentioned at the beginning, this fuel that can support the whole early stage investing niche, which is very, very important for any ecosystem. And in the US, they are born and they already have this gene. They already know, it's in their mindset that I can invest in startups. So every kid, they already know it, because they know somebody, or their family investing, or they know somebody who is investing, their neighbors, somebody in their network. And it's very important. I had this conversation on LinkedIn not long ago, that personally who has done that and succeeded. And this mindset as well, right? That it's actually possible for anyone who has some capital and who wants to build the capital. And today, I think everybody understands that it's our responsibility, and only our responsibility, not the government, not somebody who will come and save us, but it's actually we are those who are saving ourselves and building our future for us, for our kids, our families. If we start building it early, at some point we can grow that capital, and we can more opportunities unlock, right? Because I also get some comments like from people when I talk on different podcasts, or I'm invited to share our perspective. People are, come on, are you serious? People from CE, while you're talking about investment, like, do you think that everybody has this kind of capital to invest? Well, of course, not everybody at this particular point of time. But I think all of us are now already comprehend that that's where we should be moving and going. And we are building that step by step. And, as everybody's saying, the best time to start investing in any type of asset is like yesterday. So you start small, you start from some classical assets, the ones that you understand, or the ones that you have some experience, or some friends who have experience. And then you build that investor portfolio of yours when you are ready to move one step, further. And at some point you already are more kind of, familiar with risks associated, and you're more open to that. And then you can start already, investing. Today, it's kind of possible to do even with a couple of thousands. Nobody says that, you have to build your venture portfolio like in 2026. No, it's like you have to build, it's a long term. So you just sit down today and you decide, okay, I want to build like 10, 20 companies portfolio within the next 5 years. What do I do? Where do I start? And then step by step, you start doing that. And it's like 5,000 today, 10 tomorrow. And then it's kind of, step by step, you build your first like 5 companies, and then, you add some more. And I think that we are actually moving in the direction where the company, like these companies are more accessible to the investors, and investors are more open to that opportunities. And with VCs, it's a bit different, because VC, if you want to be a part of that, so you have to entrust the strategy.
Yeah.
You have to dedicate a larger ticket to that, and then you just entrust into the managing team who is investing the money. Of course, you will see the results, but that's a kind of thing that is more passive, and you are not participating in that. And that's basically the job of the management team of a VC firm to do that for you. And when you're building your portfolio in a syndicate or in a club, you're doing that by yourself, and you're kind of learning deal by deal, which can be very helpful for you as a entrepreneur, as a business owner, as a just person who lives in 2026. Options are there, and I think it's becoming more and more accessible every year.
Thanks for great explanation. I also want to add about the culture. So as you mentioned, in the US, it's part of their culture to know about startups, to discuss, I don't know, what Sam Altman did last week, for example, or some rumors. So people literally know what to do, even if they are not building some projects. But in Europe, especially in CE, people don't have this deep culture roots in investing. We have have to educate ourselves and, if it's possible, give this education to people. I want to ask you about the biggest misconception in angel investing. What people think wrong about angel investors?
Well, yeah, as we already mentioned, that these are kind of the rich people that have millions of dollars to allocate. That's not true. I personally work with the angel investors every single day. I also, just go to different workshops and talk to them. I see these are people that are even working in some companies, like, on C-level positions. They earn some capital and they are ready to start allocating that. So I think that one is really something that everybody is getting a bit wrong. Another thing that people are bringing their mindset from other assets, that so I'm investing and I'm going to see the result tomorrow, right? Or like in a month or in a year, I'm going to make those millions of dollars. That's also a bit different, because yes, venture asset is the asset that brings you the highest returns, but that's the asset that it has low liquidity and longer period of return. So you have to be more patient with that. We want everything now, fast, and that's great in kind of in entrepreneurship, because we are kind of very, very active and we try many things, etc. So it's great, but that mindset is not working for VCs or for angel investors. And maybe the last one would be that I will make like 1-2 very successful investments and that's it, and I will be happy. My kids will go to Harvard or Stanford, and I will have some villa in Maldives or whatever. No, it doesn't work like that. You have to build a portfolio to be successful with with private deals portfolio, with angel investment portfolio. You have to build a portfolio that is at like 20 companies at least, so that you have diversified, very sustainable one that can bring you returns that would actually be substantial, right? Not just nice to have, but something that will really change your capital structure. For example, we had investors that joined us back in 2019, so it's already some time with us, and they have rather large portfolios already. And so they have seen different cases. So they've seen losses because some companies just they failed, but they also saw like 22x's, making like $500,000 out of 25,000, so that's only because they have portfolio. That won't happen with one-to investments, and I'm telling it everywhere. But still, people join iClub and they say, okay, so I want to invest in this company. It looks very, very promising. Okay, it looks very promising. It is promising. It's great. But maybe let's think about how we build a portfolio, not just invest in this one or these two companies that probably, the market will change tomorrow. We know that something will definitely happen tomorrow. We just don't know what. And then, this company is not so promising anymore. That's why portfolio and long-term patience and, accessibility, it's there. You can be part of that, definitely.
And yeah, I guess this diversification of risks and having a very diverse portfolio makes you more stable. So I have a data that 242 billion was invested into AI startups, and it's just the first quarter of this year. And 91% of all startup funding went to AI. So which parts of this AI stack do you think are genuinely creating value, and which parts are zombie companies?
That's a huge shift, but we are loving it and we are supporting it. I'm actually the lucky person because I've been in the industry for a long time, so it's like closer to 20 years already. So I'm kind of that person, and I still remember the time when we were looking at pitch decks of the companies that were talking about, they were not using the word AI, they were using machine learning, of course. Back then, it was taboo to use AI, so they were using machine learning. And when we were looking at the pitch decks, if the team of the company didn't include any PhD, nobody will talk to the company, Nobody will just continue to look at the pitch deck. And now how it's all, flipped. It's just crazy to see how it changed and how, the people are entering this space, and it's becoming so open. But I think it's a huge opportunity, and we are looking at that as a huge opportunity, because we see that, and we believe, and we invest in companies that are building infrastructure solutions. They are, using their proprietary data that they have been collecting for years, and they are actually leveraging that now to train their models or optimize their solution in a way that will help them to bring value to their customers faster, cheaper, will, increase the margins and make their solution more business and economically efficient. That's one part. And the next part would be the companies that are building vertical AI solutions, because they are able to integrate into the processes in a way that they can't be substituted, so they are so deep into the processes of different niches or different verticals that the professionals they can't imagine like their day-to-day work without this part of their stack. We believe in that, and we have actually in our portfolio, we already have companies like that. And for example, we have a company that have built an Arabic AI. Can you imagine that? And just, it was so funny that when we presented it to our investors, they were not psyched. Can you imagine? It was like, we are bringing you like OpenAI, or we are bringing you like Anthropic just for Arabic world. We are bringing it to you, and they were nice, but we don't know. And it was really interesting for me, because I was psyched. I was like, it's crazy. They're actually building an infrastructure. Another company that is actually doing something, and they just created the solution for lawyers. And they have not just, just bring something that they have to download. They just integrate it into Microsoft 300. Every company is using every single day. And now when they open their usual working environment, their solution is just right there, so they can't not use it, and that's crazy.
Yeah.
And again, our investors, well, nice, okay, but how they're finding their clients? They are not like, they're out there in front of them, so it's really crazy how there is these opportunities to actually leverage the for me, sometimes it's interesting how always this is so obvious at the start. I'm sure that with next 12 months, when they show huge progress and there are like millions powered by our other investors into the company, other people will kind of catch up, but we like to be the first ones.
You mentioned AI teams that are involved strategically more deep into the ecosystem. It reminded me, of course, Anthropic, of course, OpenAI, who are involved in some governmental programs in different countries, and also ElevenLabs. I see their strategy, and it looks like they try to establish these relationships with different governments, with Polish, obviously, with the UK government, and around the world. So they explore and try to find not B2C clients or small B2B, but huge institutional and governmental clients who actually impact and make decisions, the biggest decisions. It's really interesting, and we'll see how the world will change in 2 years, 3 years. We'll see.
And everybody's just saying that, okay, so that's something that is already here. We are stuck with that. We need to understand how we're going to live with it and how we are going to leverage it and use it. But that's something definitely with us, and we'll see how it unfolds. But I hope that it will unfold in a good way, that it will help many industries to just, make a huge progress within a very short period of time with very small resources.
I also hope so. What's boring category you find genuinely exciting right now? So what people underestimate?
I've been experimenting with the topic that I'm very actually excited about. And we in ICLUB and in T Ventures, we are investing in this type of. But as we can see from the views and likes, people are not so much interested in that. Everything around science and digital health, but not only, something like GLP-1s that everybody's talking about, more boring stuff like, using AI to design proteins, or using, AI to build the whole strategy for new medicines and how they are used, how this technology is used in the labs, and how it's actually helping, science projects, biotech projects. So that is not very much spoken topic. And especially, of course, in the US, there are many companies working on that already and already leveraging this technology. And we have in our portfolio companies that have made just huge progress with using AI. And now we see that we are going to exit the companies much faster than we expected before, just because they are now making huge progress on their, on all the tests and they are doing. I'm also often join different demo days in C region. I listen to pitches and I've heard only only two companies that are actually using very similar technology in this space. And they're talking about that, they're building around that. That's something that will definitely be our next huge AI boom about everything related to science and health. And those companies that will leverage that will be successful and will have huge opportunities because the financing is there and the opportunities are there.
Yeah, thanks for sharing. And a lot of listeners of Decentralized Voices care about crypto and privacy tools. Is angel capital flowing into privacy and decentralization?
Yeah, so of course it does. There are the solution, I would say, solutions that are interesting for the investors. The main thing is it's really selective, but I would say that it's selective in almost any vertical. Of course, news and like that appear like every single, I would say, quarter, they don't help, but still the interest there. And the most important is like what is the solution, right? So the investors, they would ask like hard questions about who is actually paying for this and why are you doing this today, what is, because like the ideology doesn't work. It's much more about, again, privacy infrastructure. If we are talking about companies like building around data sovereignty, some identity tools, etc. So it's really getting the attention because it's not only like in the US anymore. In Europe, there's a huge trend and the regulations around that, and that's every single regulation, every single government decision or any single document that is published on a governmental or regional level, it opens the opportunities. And if something is regulated, somebody can say that, well, yeah, it kind of takes away opportunities from one type of companies, but it gives opportunities to other types of companies.
Yeah,
and
exactly.
The opportunities are there. Just understanding where are this industry or this vertical is actually heading within next like 5 years, not today, not in this particular time, but more like in next couple of years. And if there is the vision and if it's really solving the problem and there is the customer willing to pay, B2B model is becoming more and more attractive to investors because the number of tools we need is becoming smaller. We used like 10 tools. Now we can use one to solve all those 10 problems.
Yeah.
That's why with B2C, it's tricky, it's expensive. And with B2B, it's absolutely different. So I think that the companies that are moving in the solutions with this understanding how to solve some really big problems of B2B or enterprise customers, they will definitely be interesting for investors and private investors as well.
Yeah, I agree with you. And you mentioned interesting cases about digital identity, or there are a lot of products for on-chain identities. For example, some products like ZK Passport, they allow you to confirm that you are from a particular country, or you have like a specific age without revealing your entire identity. Many countries, they're exploring such type of products because they are really interested in providing this privacy to their citizens, but still have the opportunity to check out what they need to check out. Or for example, like we built DecentWealth, and it helps you to preserve your privacy without giving up your name or phone number or email, and track your portfolio. So that's really, really nice, and I hope that such types of businesses and projects will grow in demand. Stable coins and real world asset tokenization, it's getting serious, and it's getting a lot of attention from institutional investors, probably private investors, angel investors. Is that the blockchain use case that finally breaks through normal
last
people?
couple of quarters, it became the hottest topic imaginable for the investors, because anybody who has tried to move money around and to make some cross-border payments, etc., so they know the pain. We are talking with you today about the people that are actually having some capital and are trying to to not just put it somewhere to lay for some time, but are trying to make it work. The most, I think, important thing about the capital, that the capital is there to work. And this is the solution that helps to actually make it fast, make it much easier, and resolve many cases. We had one solution that presented to our investors. We were talking about this product, and then, in a couple of months, they had some issues on a regulatory basis. Not because they did something wrong, but because there was some change, in the regulations, and they had and their partners, they had to move things around and change some structures, and they were affected as well. So that was kind of on hold for a while. Of course, now everything is settled, everything works fine again, and so on. But still, there are these hiccups on the way, and every hiccup that is related to this space, it's like blown out. It's not wow, they can't do anything. So that's, I think, it's just a matter of time, and we need more solutions that are stable and that are supported on a level of regulations. And as soon as there is the dialogue and and some understanding, then we will have more stable ecosystem there. And of course, another thing is about UX and the kind of accessibility for less educated financially people, and because I see some investors that have less experience with these solutions, so they don't know how to do that. So more structured solutions we have, more support there is on a regulation basis. We see the advantages, and we see how it helps in today's world where we have companies working in multiple geographies, people invest in multiple geographies. So it's important, like this cross-border is important. It's crazy to pay crazy fees, right? When you're trying to make money and you're losing money. So it's definitely just the matter of time.
That's why a lot of companies are waiting for proper regulation or like proper infrastructure that can make it faster. Okay, let's talk about startups and the CE ecosystem. You have a rich experience working with startups, and you were a mentor at Techstars and other startup incubators, accelerators. So can you please share what does the CE ecosystem understand about building companies that Silicon Valley doesn't? And of course, where does CE still fall short?
So definitely where we are strong in capital efficiency. We are very strong in that, and we have no choice, basically, because early stage financing is available in the US. It's still not available in the required amount in our region, So it's still, if you want to build something, you have to do it by yourself. You have to to cut every loose end and try to build something with with nothing, and it should work, it should result, and then you will have something to talk to VCs. So definitely that's something that is a I think this is a very strong skill that we have. The hunger, our startups founders, they are still very much hungry for doing something, and they are very kind of lean, and they especially I would say like Ukrainian entrepreneurs. They're very, very resilient. The word of like last couple of years. But yeah, I saw
Yes.
it in action. People like with war happening, and they're still building excellent products, and they're shipping the products outside of Ukraine. It's crazy just what they are able to do. But if you're talking about the US founders, so of course they also have their modes. So I would start from from the number of success stories that they have, and the kind of serial entrepreneurship is in their blood. Also, this kind of failure culture. I think that it's important that people can fail and still be successful in their next
Yeah,
venture.
I love it. I love it. The best thing I like about the US entrepreneurs culture that you can
Yeah,
fail like two
yeah,
times, three times, and still you can find funding, you can find
yes,
partners, you can
yes.
like invite people to work with you together, and it's very different from the CE culture or from the culture of Middle East. Previously, I had a guest on my podcast, Mashal. She is from Middle East, and she shared they also don't have this culture of fails, and it would be a huge shame if you fail your project.
Mhm.
So you have to work hard, like very similar to Eastern European culture.
But that's a huge stress on the founder, and also I think that's why many founders in our regions, they continue to work on something that has no sense, that has failed
Yeah,
long ago,
exactly.
and they still they ride this dead horse, and that's terrible because they waste time, they waste resources, they waste many. Just time is the most important. And in the US it's completely different, and I like that, and I think it's very important to shift that. It's a mindset, right? It's a mindset. And maybe one more thing, it's the I would kind of call it in like two ways. It's like ambition and kind of the way, like the storytelling, the way you present yourself. So the ambition, I have the opportunity to talk to our portfolio companies founders on a regular basis. And I think I'm really honored because these are the geniuses. I talk to geniuses on a regular basis, and for them it's like we are going to change the system. We are going to change the to completely the whole infrastructure, the whole layer. We are just rebuilding it completely. For them, this way of approaching the way they are building the company is absolutely normal. And in our regions, the ambition is not that. It's just okay, so we'll try to solve some problem, but if we succeed, and how they are able to sell themselves, how they are able to present themselves, this is also very important. And I'm not talking about kind of overselling, but just to be able to highlight the most important things about yourself, about your company, about your team. And that's definitely not the case for our region, and we have to learn how to do that. And for example, we have many accelerators and many incubators and many programs that work with founders, but I don't see many of them paying a lot of attention to that part, how to kind of show you how to present yourself. Because I have a friend here in Poland, and Maciek Sadowski from Startup Poland, and one of his talents is he's a great speaker and he presents greatly. I saw how he worked with a mentee. She was building a product, and what was interesting, she came to the program with one product, and then during the program she changed completely the whole idea. And the way she presented that pivot and the way she presented herself, because he was working with her on that, she won the competition. She was applauded by everyone. Everybody was shocked by the progress, etc. And that was huge work that he did. And I think that's something that we need here in our region. We need to pay a lot of attention to how to show our fund, how to help them to be kind of
Yeah.
to be seen, to become seen. And that's definitely something we have to work on.
Yeah, thanks for your advice. And I'm sure every startup, not only from the CE or European region, should listen to this and think about this and implement these pieces of advice. We just talked about different cultures, and I want to ask you about the perception of wealth in different countries. Maybe like how do people from different continents or countries perceive wealth, and then I will ask you about your personal definition of wealth.
Well, it's really interesting because every culture, they have so different perspectives on that. Because if we are looking at the US, so it's more about kind of visibility. So what I own, what I have, they are open to share, like, this is my, my property, and this is my portfolio, and this is, so they are very open about that. And for them, it's okay to, to kind of mention it in every single social media that they are an investor, so they are not kind of hiding that at all. And this is about being visible. And if we are talking about CE region, for example, and I would say Asia as well, it's more private. People are building it, but they are more building it for security, for family stability, and they don't want to stand out. People, if you just look at the people that are mentioning that they are investing, it's like the number is just lower, substantially lower. They're just not very open about that. If in the US, there would be kind of open events there, people will show up for investors. So especially private investors, because VCs, it's a different world, but private investors, it's okay, for them to show up. And in the CE, it's like, like clubs, places where nobody see you, the photos that are not made, etc. So it's kind of, we are doing that, but we are sharing with very closed circles, of people that we are actually doing that. So that privacy is definitely the point for the CE region and for this part. And if we are talking about Middle East, so there I see this generational dimension, this something, that comes from like families, and but again, they are like, they are not only like to steward the wealth, but they are to accumulate wealth. And that's something that, the whole generation is building, and then everybody is utilizing that. I think it's just different values or things that are, kind of important, or the priorities for different people in different geographies. And for me, for example, was interesting that even, for example, in CE, we have a different approach. Like,
now I want to ask you, what does wealth mean to you personally?
I would say that they're kind of more philosophical and maybe more down-to-earth things. So if we are speaking about down-to-earth things, I would say some kind of, things that, some words that associate. So definitely resources, definitely opportunities, and safety. But again, safety is a very tricky word today, because very often we see that wealth doesn't provide you the safety that you would expect it to provide you, right?
Yeah.
But still, I would more call it kind of calmness of your mind, at least for some time, at least couple of hours per day, something like that. And if to speak about more kind of on a philosophical level, I would say the word optionality, so that a wealthy person can choose what they want to do, where they want to be, what they want to be a part of, and what they don't want to be part of, what they don't want to do or don't want to be associated with. And this optionality, I think it brings you, the freedom. And I think everybody wants that in their life.
Last month, we participated in ICC in Cannes, and I asked a few people there about wealth, and almost all answers I got were about freedom, safety, but safety, it was mostly from women's side. Yeah, because I guess women feel this unsafety on higher level than men. So that's why it was more popular answer among women. And also, like this freedom of choice. It's a bit different from general freedom. So this optionality that you mentioned, I guess that was the right word. What's the question about investing or wealth you wish more people asked you that nobody even does?
I would say about the kind of what's the negative or not so positive experience, and it might be from different perspectives. From one perspective might be, for example, so you invested and you failed, right? And the company failed. And what was the mistake? Was it the mistake in your choice, or was it just the market? What was kind of, let's go deeper and dig deeper and try to make find the patterns possibly, or at least some answers. And from another perspective, I was asked once, I think, or at some conversation, that you didn't invest in the company, or you didn't support the company because you didn't understand or you liked or whatever the solution, and they succeeded, right? And what was that? Was that your mistake again? You haven't noticed the trend. You got like mixed signals. What was there. And I think that that kind of analytics, that kind of analysis and due diligence would be very helpful to understand the patterns, because if you know what didn't work or what was wrong, then you can reverse engineer into what is
Yeah.
right, and how what patterns should I be looking for in the company, etc. So I think that might be very helpful. Well, investors don't really like to share a lot about their failures. Well, that's again this thing about our mindset. I think that investors in the Silicon Valley are fine about saying, okay, so I missed on that and that and that opportunities, and we didn't invest in Uber, but what can I do, and they're sharing that openly. And I think that sometimes it's kind of also that on some websites of some VCs, they have this page which is called like missed opportunities or something like that, so they're open about that. And I think that in our region we are not so open about that. We don't like to speak about what went wrong, what we didn't notice, or we noticed something what was not right. And I think that if we shared more of that, that would be also very helpful, because there are a lot of insights in that, maybe even more insights in that when insights in positive and successful cases. I would like to have that conversation with with the peers to discuss, okay, let's take one case and just try to find what was underneath, and that would be, I think, very helpful.
Yeah, thanks for sharing, and thanks for this amazing conversation. It was really insightful for me, and I'm sure for our listeners, for viewers of this episode on YouTube. It would be a door to investment world. So thank you so much for sharing your experience. And guys, I will leave under this episode all links to Anna. You can follow her and see what she's building, what she's investing in, and a lot of other insights. Thank you, and see you in the next episode.